you're trying to destroy the economy. Well, no, we're not trying to do that. We're trying to, trying to stifle inflation. And it was like one of those conversations. And so if you don't ruin the economy, that means you're not going to, not tackling inflation. I mean, obviously the Fed raises rates to create a recession once recession is visible. So you get, the market gets too excited before the pivot, and the Fed
Yes.
is too late to react to the data of a recession.
All right, guys, hello and welcome. In this particular video, I have my good friend and analyst, Zach Meir, who's basically going to share his view on the stock markets, especially after the recent major rally we've seen in the stock markets. And given that the markets have just recently reached some of our targets as well, I'm going to ask Zach about this particular chart you're seeing here. What typically happens after a Federal Reserve rate cut. So we'll talk about the Federal Reserve and potential rate cuts, which we might see sometime this year. And also this chart of the Fed pivot chart as well, and what he thinks about this. Should be quite interesting, guys. Join us. All right, guys, welcome back. Zach, thanks very much indeed. Really appreciate you joining me in this particular video session. How are you?
Very well, Alessio. Doing well.
By the way, for those of you who don't know, Zach has been a chart analyst and also a trader and chart analyst for several years. Zach, is it correct that, you worked in a number of brokerage firms in the past, and your main specialty was the London stock markets, but also you've had experience in not only the stock markets in the UK, but also in the US as well. I mean, you pretty much take a look at both and the crypto market as well. Is that right?
Yeah, well, the two things. First, I mean, I got into the stock market when I was 7, because that was the time of the oil crisis and the 7-Day War, and I was listening to that on the radio to school. There was a
Great.
new station that came out, and so the autumn of '74. So I got into it the age of 7, and there's a lot of similarities between 2023 and 1973. In 73, people saying, "Oh, right, well, but 74 is going to be much better." And it didn't get better for like 10 years. You see what I mean? So
Right.
you get that sort of thing. Whereas, here, because we're so weak, we just think
Yeah.
everything will get better within a month or two and it'll be fine.
Now, here's what I actually want to bring to your attention. What I want to talk to you, and by the way, guys, before we continue, make sure you go and check out Zach's Twitter feed. Please go and follow Zach on his Twitter. He posts a lot of fantastic stuff. So make sure you go and follow him on Twitter at Zach's Traders Cafe. I'll put the link for you guys in the description. That's at Zach's Traders Cafe. Zach, let me show you my first chart. So Zach, here's what I want to bring to your attention. I want to actually mention this to all our viewers here as well. This chart is from the Federal Reserve's own website, as you can see here. And it shows essentially when they have raised interest rates and when they've cut interest rates. So the federal funds effective rate. So essentially what we're looking at here is the increase or decreases in the interest rates by the Federal Reserve. And notice that whenever the Federal Reserve, going back to the 1960s, in fact, whenever they've gone from increasing rates to then cutting rates, notice what happens. Don't notice those gray shaded areas. So the gray areas, the shaded parts you see on the chart, the shaded areas represent the recessions. Okay, let me just repeat that point. The shaded areas in gray represent recessions in the economy, which, by the way, correspond and correlate with big major crashes in the stock market, which I'll show you in a few minutes. But the first important point I want to make here is this, that whenever the Federal Reserve has gone from raising interest rates to then cutting them, so for example, 1960s, 1969, 1973, 1980, 1990, the year 2000, the year 2007, I mean, that's a very good example I want to point out here. In the year 2000, so notice, Zach, when the Federal Reserve began to cut rates in the year 2000, then we had the recession following that, which, by the way, came at the same time as the dot-com crash. And this was in 2007 when they began to cut rates. Then we had the 2008 recession, and shown in gray, by the way. Same, by the way, in the 1970s, and also following 1969, and also 1990, and so on. By the way, not every single time, but the majority of the time after a Federal Reserve rate cut, we had a recession.
Can I intervene there?
Yeah, sure.
I mean, obviously, the Fed raises rates to create a recession. Once recession is visible, then the whole point is that they're raising rates to create a recession to
Exactly.
inflation. So it should be the case that once they've killed the golden goose, then they can then lower rates because the job is done.
Yeah.
And I think I remember a very sort of squirm-worthy interview with the Fed Chief Powell, that one of the recent ones, where somebody was questioning him, saying, "So you're trying to destroy the economy?" Well, no, we're not trying to do that. We're trying to, trying to stifle inflation. And it was like one of those conversations. And so if you don't ruin the economy, that means you're not going to, not tackling inflation. Well, no, we just want to attack, he was going on that. It was a fantastic,
Yeah.
it was very interesting in that sense. So, I mean, actually, that's quite a nice, it is actually a very good screenshot in the sense that, they raise rates enough to create a recession. And once they've
Exactly.
done that, that means recession reduces inflation. And so they've actually done it rather better than I was expecting. Obviously, I remember that
Yeah.
the 73 time is the one I remember.
Absolutely. Yeah.
And actually, they did it rather well. You could
They
actually
did.
argue that things were better by 74, but
Yeah.
there we go.
I just want to mention one more thing because people may be confused by this. The year 2020, they began to cut rates, and there was a mini recession in 2020. As we know, we had mass unemployment, and of course, recession followed in the year 2020. It was very short term. That's why I put it there. But overall, in the past, 2007, 2008, 2000, going to the past, every time the Federal Reserve has began to cut rates after raising them, pretty much a recession is pretty much followed. And let me just show you the next one here, the next chart, which is quite important. So this is the Fed pivot going back to the year, again, the 60s. 70s. Now, the reason I want to mention this, and I've showed this chart before, but it's worth mentioning this is the S&P chart after the Federal Reserve pivots and makes a rate cut. So when they start cutting rates after raising them aggressively. Notice that after the Fed pivot occurs, when they begin to cut rates, the biggest portion, the biggest extent of the stock market crash occurs after the pivot, not before. So a lot of people think that it happens before the Federal Reserve pivots and cuts rates. No, it happens afterwards. Notice in the year 2000, after the Federal Reserve began to cut rates and pivots, the 51% crash occurred right there, as we can see there on the chart. And there it is in 2007, 2008. And as Zach said, also in the 70s, 48% drop, by the way. 27% in the 80s, after 69 Fed pivot, 36%, and so on and so on. Now, the big question is this. The big question is, what about the year 2024? What does Zach think it's likely that this year will have a rate cut, or maybe it's next year, 2025? What does he think? So Zach, the Federal Reserve has been raising interest rates from 2022, 2023. They paused them pretty much late 2023 and until now. The question is, do you think they will continue to raise them or actually continue pausing them and then eventually cutting them? Which one is more likely? Personally, for me, I think, and I mentioned this in a previous video, I think the higher probability is that at some point this year, perhaps by the end of this year, maybe by the end of summer or by December of this year in 2024, I think it's much more likely we'll see a rate cut. And then the market could begin to unravel. And as we saw, we could see a recession probably develop and then a major crash. But before we go into that, my first question to you is, when do you think a Federal Reserve rate cut could occur? This year, or going to 2025?
I think it needs to be this year, probably because of the political side. It would be November or December. That would be the best. That would be the safest. Given the way the stock market is, etc., it looks as though if they lowered interest rates now, and the market would go bananas. So I don't know they could do that either. So it's probably that the rates are actually at the right level, and in a way. If it was me in charge, I'd probably just keep them where they are, and just not if lowering them could be could create imbalance, and I think that ideally just make the noises that we'll keep an eye on things, and look and even say look, because it was an election year, we don't really want to fiddle with these things one way or the other, and just leave it till November, December.
Interesting. So your view is that potentially we could see a rate cut by December of this year.
I mean, I would say definitely this year. If it wasn't an election year, probably September, October. But I think doing that at that time, it may indicate a slight bias.
So too much risk in an election year in your view to start cutting rates before then.
Yeah, okay. I mean, I'd almost actually probably get that out in the open at some point. So look, we're going to leave things as they are until after the election.
Now, it's also, we are in an election year as well. There are some seasonal patterns which come into play. We won't go into that in this video, but there are usually some volatility which occurs. Is that right from your experience? Usually there's some volatility around about election time, October, November time, which could produce some volatility, maybe some pullbacks, drops in the market sometime October or
Yeah.
September even, perhaps.
Yeah, I think there's well, no, I think tends. I mean, from my experience, it just tends to sort of die down. So people just want to wait for the, if once we get into September or just after
Mhm.
the summer, people are sort of they're sitting on their hands. They're not going to make a big bet until they know what the result is, et cetera, et cetera. But barring any surprises, I think you tend to have people sitting on their hands from September, October onwards. If
Mhm.
there's going to be the big move in the market, I think it would be this side of the summer and then hopefully a nice holding pattern near 5,000 for the S&P or something like that would be the best result, I think.
And so generally, you're still maintaining a bullish view for the stock market for this year, up to the rate cuts
Yeah,
eventually.
yeah. I think the only interesting thing would be, which I've just sort of thought about while you've been talking, is that if the inflation that we raised rates for after the pandemic was supply side inflation rather than demand driven, then actually the interest rates that we have now are too high.
Mm.
And if the supply chains are back and they're back after the Ukraine disruption and all the other disruption, then we could actually be heading more towards a deflationary side, and the inflation may be actually going too low, and interest rates are too high for that. So that is something which
Yeah,
that might be why the stock market's on fire as well. So
yeah,
that I think there's because everybody's looking for the double dip, and there'll be another inflation will go high again. But actually, the only reason there was inflation after the pandemic was actually supply chain problems and obviously people sitting at work doing nothing
yeah.
problems
That's right.
rather than actually demand-driven problems. I think there wasn't that, and a lot of people were sitting on their money over lockdown. They will still, a lot of sensible people still have decent money in the bank, and they're not spending it, so they're not going mad either. So I think there is a chance that 5%, is the 5% area, 3, 4, 5%, whatever it is too much, and there will be a problem, at least in the UK, there could be that problem that just people don't spend and just everything goes the spending goes off a cliff and inflation actually falls. It's already fallen quite sharply actually, even as the government here has been raising taxes to distort that figure. So I just think there is something there that both on both sides of the Atlantic they might actually have to lower interest rates quicker than they wanted to, because inflation gets back to 3%, 2%. You've got interest rates here at 5.25. You see what I'm
Yeah,
saying? So
yeah.
there is that thing, and I think that given that the purpose of this talk is to come up with stuff that you haven't thought of and that might actually happen, that is something to keep on the radar.
Hey guys, Alessio from the future here. Just to mention that since we recorded this video, the UK has already fallen into recession. So the recession in the UK is now official. All right, guys, let's get back to the video.
I mean, we've seen we looked at those charts a moment ago, and we saw that usually after the Federal Reserve pivots and starts cutting rates, and as you correctly said, the Federal Reserve is deliberately trying to bring about a recession, to bring about a drop in inflation as well, which it looks like they probably will fail to make a soft landing, be more like a hard landing, or indeed much worse, given the history we've seen so far. Do you think, I mean, after the Federal Reserve starts cutting rates, would you be very cautious as to what may happen in the stock market after that? By the way, some people mistakenly think that what I'm saying here is that the cut in interest rates causes the crash. That's not what I'm saying at all. I'm saying that the Federal Reserve, by its action, as you said, of raising rates aggressively, then brings about the major recession and eventual crashes. By the time they cut rates, they're doing it as a response to big major dangers and risks in the economy and the markets. And as I've said before, it's the market that drives the Federal Reserve decisions. Would you be very cautious about what may happen in the stock market and potential, given the history of what we've seen after a Fed pivot and the danger for the stock market eventually after that?
I think the stock market's been very resilient. You had Ukraine, you've had Middle Eastern issues, you've had all sorts of threats. I think that the ideal thing would be to keep rates as they are. You do get that situation where the market, in anticipation of the Fed pivoting, will bid up stocks.
Yes.
And whether it's 1973 or 2000 or any other year, it tends to go too high, and the Fed is too late. So you get, the market gets too excited before the pivot, and the Fed is too late to react to the data of a recession.
One thing you mentioned as well, which is interesting, and I agree with you, is the run-up in the stock market before a Fed pivot. This is something actually I mentioned in a video I made in November, December of 2022, over a year ago. And I remember the backlash I got over that because I said something was controversial. I said, at the time when I made that video, the stock market was down quite heavily in 2022. And I said that before the Federal Reserve pivot occurs, there's usually a strong rally in the stock market. I'll put the clip there so people can see it.
Before the Federal Reserve pivots, in other words, before they decide to cut rates, the stock market usually rises and rallies right before a Fed pivot. By the time the Federal Reserve pivots and then starts cutting rates, the market usually rallies before that event, before that actually happens.
That's what happened. Pretty much we've seen a strong rally from 2022 lows to the highs we've seen recently. And I think you're absolutely right. There is usually more emotion, positive emotion before the rate cut. And after the Federal Reserve rate cut occurs, then the big trouble occurs. And then we'll be looking for some more patterns in the stock market to see what may happen. Thanks very much indeed, Zach. That's really interesting and appreciate it. Guys, make sure you go ahead and check Zach's Twitter feed, Twitter handle, at Zach's Traders Cafe. I follow him as well. Publishes great material there. And also watch Zach's weekly video, the members video, where he covers the charts of Bitcoin, crypto charts, and also Tesla as well. Thank you very much indeed, Zach. Really appreciate it.